All right, guys and gals, this is Blake Morrow. You were listening to the Morning Edge webinar. I want to welcome you all back. We got to get started on. Whoops, we got to get started on our analysis. Let me grab my uh, bias chart here. Okay, and let me go view. There we go. Okay, so let's get started with the euro dollar. Like I said, I started selling some euros at 113.60. I just actually added just a hair. My cost average is 113.58. I'm gonna expect a move up to 80, which I think is possible. But the dollar is trying to forge a low here. But let's take a step back for a second and I'm going to delete some of this stuff. Actually, I'm going to delete everything, and we can revisit it all. Okay, let's. This is all drawings from the last couple of days, so I'm just kind of removing this stuff, just to kind of clean it up, and we can, get a fresh look at everything. Okay, let's remove that. Remove that. I should have just removed everything and just started fresh, but I'm. Hold on. Okay. Okay. So here's the euro dollar, and obviously we're heading a little higher. Following yesterday's FOMC. The Fed. I have to say the Fed. I think the Fed, was on balance. I think the market was hoping that the Fed would leave a bigger and wider door open for June. Door's still ajar. It's still open. Just not as wide as I think dollar bulls would have wanted. But that doesn't mean that the dollar will have or it will continue to have a positive response. But I do have to note that the dollar is really close to huge support, obviously. Okay, now can we continue to rally here in the euro dollar? It's possible. 114 is doable. I think we're going to stop short of that, and that's why I started shorting the euro already. As we are, if you take the spike high following the Fed, or excuse me, that was the Fed. Sorry. Following that spike, we're at a 786 retracement thus far. We can, in my opinion, make it all the way up to the 113.80, 113.85, because if you take the extension of this Fed jigginess, if you will, right? You take the high to low, the 127% extension takes us, oh, whoops, that I didn't want to do. Actually, because that happened after the fact, I thought that was the pre-rally. Oh, that changes things. We actually have to do this. High to low. There you go. So the 127% extension also comes at 113.78. So I'm going to say that 113.80 should top it today. I mean, this may be it on the euro. I mean, 113.65 or whatever the high is right now. But 113.80 is 113.80 right there. Should cap the rally today. All right. And the reason why I couldn't take this whole move is because the spike high happened after the low. So we actually have to take that high versus this low. So that's actually the correct way to do the extension, actually. Trying to think anything else here that I'm missing. No. Okay. Um, so anyway, we might be able to rally a little bit further, but again, I'm going to reiterate. I think that the market is expecting a weak advanced GDP number. We're going to get that in an hour, in about 50 minutes from now. So we'll see if we can go any we can go any higher from here. I don't. I think we probably will be capped. Even on a weak number, we shouldn't go too much higher. All right, let's go to support. This is support today, right here, right through here, which is 113.30. A move below 113.30, I think, will shake anybody who's bullish the euro or bearish the dollar. Okay. Uh, in other words, if we come cracking through there, that's probably gonna disrupt this near-term bullish move. Hold on, I want to think one last thing here. All right, I don't know. I'm not sure. I'm not sure about support. Like what really key support's going to be. I'm just trying to think. When I try to think of support or resistance, I try to think of where, like in this case, where if you're a dollar bear and you're long the euro, where do you throw in the towel? Where do you go? Okay, I got long the euro yesterday following the FOMC. Um, Everything's working out great. At what point do I, get a little nervous? And I think it's right here, 113.30, 113 and a quarter, those spike lows there. So I'm going to write that down for now, but we might have to revisit that. Following the GDP numbers, I mean, if the GDP numbers are actually, at consensus, which the market's looking at negative or 0.7%. Let me double check that. 0.7% is what the market is expecting. So they're expecting, considering the last month was at last quarter was at 1.4%. We're expecting a weaker GDP number. So if it comes in at 0.7% or better, then we might push below. Sorry, guys. It might push below that. Anyway, we'll do that for now. We are in a range. Okay, let's go over to the cable. So the pound, yesterday we drew, okay, if we come down to 145, that should be good support. We spiked down post FOMC down to 44.70, whatever. We basically followed this route, which is good. And I'm not trading the cable, just so you guys know. I have no, aside from being long the pound New Zealand, which I'm not happy about. I'm not particularly happy about, and being long, being short the euro pound. This really, proves to us that key support is at 145. I mean, if we break through 145 now, you notice how we made lower highs. You see that? Okay. So if we break through 145, that's going to be a bearish event for the euro, or excuse me, the cable. Okay. That's going to be key support. And then resistance is obviously a 161% extension, which has been, or 127%, excuse me. And resistance here, you can see it's horizontal. Okay. There's a 127% extension of that last, well, it's basically the right shoulder. And then resistance. So that's key. I mean, 146.70 is key resistance. I mean, if we get above that, 147. What is it? 146.70. I'm sorry, 70. Bullish. While we're attempting to make this inverted head and shoulder pattern, busting out of the triangle. And if we can clear this, that's really bullish. Now, obviously, we're going to have to turn back into a range if we come slumping through here. But right now, the pound still looks constructive. It really does. Okay, and I have to draw this out too. If we can break above here, that'd be a pretty bullish event. Okay. All right, let's go into the Swissy. So the Swissy is pulled back. I am still long. I own it at my cost average is at 96.21. We are at a 618. Matter of fact, let's see, probably at about a 50% retracement of this move. Close to. Okay, so we're sitting right on the 618. The 50% comes in at 96.50, which is also, here, let's get rid of this for a second. Okay, that also coincides with this spike low down here. You can see that right there. Okay, I am not adding to my longs, FYI. All right, but 96.50 should be pretty substantial support. This head and shoulder pattern, whoever had me looking at it the other day, is already completed. Okay, so 96.50. That's support. All right. Resistance. I think what we have to do is we have to get above yesterday's spike highs, which would be right here, right? 97.50. Because if we do that, that would be pretty convincing. But let me give you the buts here. The downtrend line is pretty significant. Touch, touch, touch. Spike high above it, post FOMC. So that comes in at 97.25. Okay, 97.25. We are in a range. Let's go over to the dollar yen. Okay, so obviously the dollar yen got smacked. What can I say? We talked a lot about that this morning. Yesterday I was actually thinking, man, maybe that's it. I'm going to start buying the dollar yen. That was it. That head and shoulder pattern almost completed, almost may have been good enough. And then based on today's price action and based on the reaction from last night, ain't no freaking way you're going to get me to buy the dollar yen right now. Ain't no way. I was thinking about it yesterday. Thank God I didn't. Yeah, this we break through 107.70, 107.62. We break through that. It's gonna be ugly. 107.62. That will be ugly because that will be a new trend low. Okay. right there. All right, now where's resistance today? Because that's a real question, right? So I mean, if you can get an opportunity to short the dollar yen, like let's say the equity markets rally a little bit, we get a little bit of a lift. How far are we going to go? How far are we going to rally before you can step in and start selling some? I would assume it's 109 and a quarter is going to be kind of tough to get back above. Let's just imagine. I'm going to delete this because I don't want to keep it on here. Let's just imagine that low is valid. Okay, so high to low, 38% retracement comes in at 109.43. Again, we're just making an assumption that low is valid, but let's say we get all the way down to support. That's a 38% retracement is right there. What's the low here? 109.27, 109.25. I think that's going to be resistance. If the dollar yen can bounce back to 109 and a quarter, I'm sorry, I got to put bearish back on there. I have to, because it doesn't look bullish. It doesn't look bullish, and that's a big red candle. You guys know what follows big red candles? Usually more big red candles, right? So I would be, yeah. I mean, yeah. That big red candle probably got more big red candles following. It's hard for me to believe that after a big red candle like that, we're not going to see some sort of follow through tomorrow. But I mean, obviously, equity markets are going to have to really, really do the unthinkable today and rally back and fill the gap today. And if they do, maybe it derails this move. But I'd venture to guess that that big red candle like that is going to probably have a follow up. It's kind of like this one, big red candle. Now that was a huge, obviously a huge sell off. Big red candle followed by a couple big red candles. This one was interesting, but remember we're following a policy move here, so I'd venture to guess that we're probably going to be breaking down at some point. But that has more to do with equities right now, and the yen. You're at a point in the yen where anybody who's selling dollar yen or buying yen is probably like, okay, we're too close to support, so I don't want to push it any further. Not yet. And anybody who's long still is like, okay, I don't want to pull the plug and get out just yet because we're right in front of support. So hopefully this support holds. I'm thinking like somebody who's long the dollar yen. So right now, if you're holding the dollar yen, you're probably going, okay, I'm getting out of this thing if we break down, and if you're short, you're like, I'm going to press it if we break down, but we're too close to that support for anybody to, be too aggressive right now at this moment in time, especially ahead of today's trading session. Let's go on the Canadian. Let's do the Canadian really quick before the next break. So the Canadian, we continue to drift lower in the descending wedge. And like I said a little earlier today, I'm worried about my dollar Canadian long if we get below 125. As noted yesterday, the 786 retracement comes in at the bottom end of this descending trend line. We're already creating a hammer. If we have some strong U.S. data and we close our day, the day above like 126, like let's say 126.50, we're going to create a nice green bar and a hammer, which I'll say it again because I know there's a couple hundred people that are listening in now that weren't listening in 30 minutes ago. The apex in this descending wedge has gotten tight enough to where we can move out of the apex now. We can move out of there technically. we came really close to the 786 retracement here. So if we get some strong data, it'll push us back into, up to the upper end of our range. Now, our low, or actually I take that back, support is at 125.15, which is a 786 retracement. So 125.15. That should be really key support today. You don't want to see that come, being long, I don't want to see us come back down there, because then that's going to create a red bar. I don't want that. What I'd love to see is us move back into, the 126s, because if that happens, that means that it's going to create a nice daily green candle. This is resistance right now. I know 127 is key. 127.50, excuse me, is key. But right now, this high at 126.93, so 127 is critical. The reason why I say that is because if we can breach it, then we're going to start making a series of higher highs, which we haven't done in quite some time. Okay, so 127, there's 127, and I doubt we're going to get to 127 today. I really do. But 127.50, that is really key resistance. Okay, we are in a bearish trend, and we have been. All right, I'll be back in a few minutes. When I come back, we will do the Aussie Kiwi dollar index. I'm just getting caught up from earlier. All right, folks, back in a few. All right, guys and gals, this is Blake Morrow. Sorry about the short break, but we got places to do and things to see. Wait, things to do and places to see. People to do. No, people to see, places to do. Places to see, people to do. No, people. You know what I'm talking about. You get it. All right, so don't be running around doing people. All right, let's stay away from doing people. Okay. Let's see here. Where are we at? Well, let's go over to the Aussie. Okay. Michael's got people to do and places to see. Right. Okay. All right, so here's the Aussie. I did short this just a little while ago, and I shorted my cost average right now is 76.19 actually. And the reason why I shorted it is because I told you if we get a rally in the Aussie, I wanted to short the crap out of it. I was hoping we get closer to 77, but you can see we've kind of made our way up here, obviously due to BOJ action, RBNZ inaction, BOJ inaction, and hold on, let me delete all this stuff. Okay. This is resistance. No if and or buts about it. I don't know if we're going to make it up there. Excuse me. I don't know if we're going to make it up there, but that is resistance, and this is not drawn correctly. Let me redraw this one. That has to be more like that. That's correct. Okay. So coming out of the wedge, if you will, remember, don't forget, CPI out of Australia was horrendous. So that's a 50% retracement. The 618 comes up at 76.80. So 76.80 is actually key resistance today. Oop, I forgot the Kiwi. That's all right. We'll get to it. 76.80. That'll be key resistance. Support 75.50. Especially with the market trading so heavy, the equity market's trading so heavy, it's possible that we make our way down there. All right. So we are in range. All right, let's go over the Kiwi. Kiwi's still in a range, but the Kiwi, obviously, the RBNZ in action. Now they tried to talk the New Zealand dollar down. They really did. No dice. And what that tells me about yesterday is there was a lot of people preparing for a New Zealand dollar or a New Zealand dollar rate cut. I mean, that's what that squeeze represents. Even in the face of the equity markets selling off aggressively, the Kiwi dollar is still really well bid. 70 cents should cap. This should, it's the round number. If we get up to 70 cents, like you imagine this rally happening right now, RSI is either going to be very oversold or we're going to be divergent, one of the two. So either or, it's probably going to put a cap in us at 70 cents. So that should be resistance. I will tell you that this Aussie New Zealand, I'm about ready to liquidate. So just letting you guys know. My cost average stinks because I've gone from a 300 plus pip gain to like a 62 pip gain, and it's very frustrating because I've been long the Aussie New Zealand forever. It's just it needs to close back above its 200-day moving average, or I have to just let it go, which is a bummer, but it is what it is. Okay, so we're still in a range in the Kiwi, just getting a squeeze right now. Support's really easy as far as the Kiwi goes, in my opinion. It's right here. Okay, that is support, and that comes in at 69.40. So if we break below 69.40, that will probably take out some near-term longs. Okay, it's not great support. It's just you're going to get some people that bought maybe a little late to the party. They'll probably end up liquidating below here. Okay. I did short some Kiwi dollar this morning. I'm short at 58 cost average. I'm down 11 pips in the Kiwi, but it's a small position I'm looking to add though if we can get a reversal today. Let's go to the dollar index. Okay, so here's the dollar index. The dollar index, keep in mind, we are really on very key support down here. Here's your, the last year and a half's worth of consolidation. Really key support comes down at 93. It's actually 92.50, which is that spike low right there, but basically 93. Okay, we're at 93.80 right now. If you look at the 4-hour, this is not uncharted territory. The lows here are going to be important today. That comes in at 93.60, especially if we have a weak GDP, advanced GDP number. So 93.60 will be support, and that should be key support. Resistance. Excuse me. It's right here, isn't it? It is. Right there. Basically comes in at 93.90. If we can get above 93.90 in the dollar today, and we're at the bottom end of our range, that'll create a little bit of a squeeze. Okay, obviously the dollar is trading really heavy. I mean, this looks like this is borderline flag pattern right now. Okay. Let's go over to the peso. Now the peso is holding up pretty well. We just came back under a little bit of pressure here just over the last hour, but we're holding up pretty well because the market's got some risk aversion going on at the moment. we're at this is that big yellow, you know, support we've been drawing forever. So the 786 comes in at 1730. That should be support today. Okay. Resistance 1741. We're in a range just at the lower end of our range. Let's take a look at the Norwegian krona. So crude's still holding up. Crude's holding up really well. I mean, look, crude's basically flat, and the futures are down as much as they are. That's impressive to me. It really is. So the U.S. dollar Norwegian krona is actually finding support at 810, even though we can spike down to 808, but just 810 is holding up. I'm going to write down 808, but 810 is actually holding up pretty well as of right now. That's going to be pretty key support. Resistance for the Norwegian krona, it's really right here. I mean, yeah, we had a spike up over here that took us to 819. It's really this 818 that's holding us up. We can't hold spikes above there. So I'm going to write down 819, but you can see it's really 818 is holding us up there. I'll just write 820. How about that? Just to make it a little easier for us. We are in, again, I waffle from, are we in a bearish trend or are we bullish or is it neutral? That's what the weekly chart looks like. We're in this bearish channel, but we really stopped going down even as the dollar has been hit. So here's the Swedish krona. Swedish krona is back down towards major support, which is 803, right? 803. Resistance at 818. Still, nothing's changed there. I did get out of this yesterday, or 2 days ago. 818. We're just at the lower end of our range. Okay, there's your bias chart, and we're good to go. I'm gonna let me see if I can take some questions. Whew, man, a lot of work. All right, let's go to Thomas. Says, good morning, Blake.